All right, ladies and gentlemen, boys and girls, welcome back to another episode of the Financial Life Podcast. I'm your super host. I don't know why I want to say that today, Maddie D.
Okay.
Today, I have a good episode on, and this episode is specifically for you business owners out there who are trying to get funding, trying to navigate the world of business funding, business loans, and that is the world that you can get trapped in and getting these high cost loans. Every business owner that I've talked to once, like the good term loans, lines of credit, all the fun stuff, right? But what they end up getting instead are these high rate MCA loans, basically pay loans for businesses, which I'm very familiar with. Been dealing with those for well over 12 years now. And so my guest on here today, we're gonna break it down, the pitfalls of them, all that stuff, UCC, what does that mean, all this crazy crap. Before we get into that though, I do my little shameless promotion here. So some of you know, some of you may not know, I do some things besides podcasting. I help people out with some business credit, credit, one-on-one coaching, things of that nature, and some other stuff too. If you would like help with any one of those, you want to see me individually about your goals of business credit, whatever the case may be, simply go to speakwithmatt.info. Again, speakwithmatt.info. No need to put in the triple W, just speakwithmatt.info. It took you directly to my calendar, and you can book a cool 30-minute call. And that's it. With that being said, I'd like to introduce my guest, LaShawn Smith of Apollo Financial, bro. Thanks for this has been like I feel like 3 or 4 months in the making.
Of course. Yeah, I know. It's been 3, 4 months, but look at this way. We're here. We finally both it worked out for both our schedules. So hey, like I said, I'm looking forward to it,
Yep.
especially talking
This is
about what your podcast is all about. It just so happens I'm familiar with this space.
Yeah, exactly. Because I know
Yeah.
I made a post in the veterans group and all that stuff to have you on talk about this because what I do with business credit and the funding side and what you do, it all goes hand in hand. And this will be a good episode to help people understand like what how to navigate it, what traps, what mistakes to avoid, because these mistakes are costly. I've seen it where I know you've seen it. We're trying to get people funding and they have like two or three MCAs, and MCAs are merchant cash advances, where basically they're giving a loan against your business revenue on a monthly basis, like
Mm-hmm.
one, two, three of them, and they're paid back through either like a daily withdrawal, a weekly, and even some places I haven't seen very often may do like a bi-weekly, but it's very expensive. Like for example, you can get like 12 grand, and in 4 months you're paying back like 25,000 or something like that.
Oh yes, or
Oh
or
yeah.
even more,
Or
or
even
even
more.
more. Yeah.
Obviously, yeah, the more they give you, the more you're gonna pay back. But people take them. Some people have a high cash flow, some people don't. And it's just like you. And after I've dealt with people in the past who are like, I don't want these higher loans anymore. I'm like, all right, that's fine. You can get different ones, but like, which credit score? Oh, it's a 6 or 5. And I'm like, well, you're stuck. So let's
Yeah.
get that up. And if you got too many, now we have Sean. But Sean, tell people who you are. Like, how'd you get into space and all that fun stuff? Like.
Well, as you all know, my name's LaShawn. I'm the managing director for Apollo Financial. And what we do is assist startups as well as small to medium-sized businesses in obtaining funding for expansion in terms, let's just say, equipment loans, business term loans. We even offer access to credit cards if the business owner needs it. Okay. But what we don't do is engage into the predatory space, like you were talking about
Yeah.
those business cash advances. In some cases, they can get as high as about 200% APR or annual percentage rate. Now, before we get into that, how I got into the space, believe it or not, I was one of those business owners, so I know
Oh,
some of the challenges there in obtaining financing. And so I thought, all right, well, since now I am in a position to assist others, well, why not?
right.
Okay, and so I've contacted several, 9, 10, 11, 12 different lending institutions. We pretty much form a partnership to where when people need funding, they come to us. They do fill out a short little application. We talk to them about what their needs are, and then we basically go out into the market and shop for them. And the advantage there is it saves the business owner time because they're not going to 10, 15 different lending institutions. filling out multiple forms, and of course taking multiple hits to their credit report. Because here again, believe it or not, every lender will look at that FICO score, and every time that FICO score gets pulled down, they end up in the 600 range when they probably at least had that 660, 670.
Hmm.
Well, they come to us, we do the shopping form. We do not do a hard pull on their credit report, but we look at their entire profile because a credit report is just one part of the story. It doesn't tell the entire story of the business, and the good news is all businesses are very unique and what they actually need. So we talk to the lenders directly, and they say, yeah, this is something we could do, and we go ahead and connect them with the actual lender. Now, at that time, the lender, of course, they'll need the financial documents, and then there'll be one hard pull on their credit report,
Right.
not 15 or 20. And believe
Yeah.
it or not, we have a 93% approval rate
Hmm.
with the companies that come to us. And I can think of, and we'll talk to her later on the podcast. We had a young lady, she actually did a startup, and we were successful at securing $107,000 for her
Wow.
and startup capital, very attractive interest rate. And so she was fairly pleased. And I'll talk a little bit more about that because she was actually more or less here again startup because as you know, zero revenue, but there were other channels that we could actually follow to make sure she could secure that amount of funding. So I thought, wonderful. That's just kind of some of the stuff we do.
Wow.
Whereas others, we did help them, and we'll talk more about it later on the podcast, restructure their debt and get out of these merchant cash advances. We were successful there at reducing his interest rate, got it down by 50%. So now, as opposed to a daily and weekly payment, he pays once a month for a fixed period of time. At the end, he's done and basically free from the MCA. But we'll
Yep.
go more into that later. But anyway, that's kind of what we do here.
Yeah, I like it. Yeah, because I know I connect with you because I do come across people that have multiple ones, and it's like in the past I've come across like what was it? It wasn't a consolidation. It was like a MCA reverse consolidation, and even they couldn't get. Or I know I had people. It was that, and another one. They even they couldn't get them like a MCA consolidation. I'm like, this is
Yeah.
just it's ridiculous. It's like if people need the most help, I can't get it to them. They will take anything, and I'm like, I can't do this anymore. It's but you actually have helped out a
Yeah.
client of mine, which is great because they're very happy. Um, so what should people know from your perspective on these MCA loans, about them, and how easy it is to get them? Actually, know how easy it is to get more than one.
Ah, yes, it is because what an MCA loan is going to do is base is basically advance your credit and debit card sales to you and charge you an outrageous interest rate.
Right.
Yeah, but before we go down that road, and they're easy to get because really they don't, look at any other thing but your credit and debit card sales. Some of them will say, okay, we need at least 15,000 per month. Others say 20.
Yeah.
They'll look at it over a 3-month period and say, okay, we'll advance you 40,000. But what they're not telling you is once you sign the contract, they will place what's called a UCC lien against the business itself. And basically, a UCC lien is a Uniform Commercial Code. One is what it's called because there's one, two, and there's also three. But we'll look at one. And
Hmm.
what you're doing is pledging the business's assets as collateral for the loan. And in this
Huh.
case, it's your credit and debit card sales.
Mm-hmm.
So let's say, for example, and they do file this with the Secretary of State in your home state, not the one, that you're familiar with that go overseas and, diplomacy, but these are the Secretary of States in the state where the business is located. And what it will do is actually, once they file it, the credit card company takes first position, and when it's a first position, you can't get a loan anywhere else. Is basically what they're doing because you have pledged the assets for collateral. And what
Right.
will happen, and they like it because to them, we've got guaranteed money. And once you take the loan, if you default on it, mind you now, some of the payments are daily, some of them are weekly. I spoke to a gentleman about 5, 6 months ago. He was paying about $2,500 a week. 12 to 1300 of it was interest, and the rest of it, of course, was principal. And he had been doing this for 6 or 7 months. I said, wow, let's see what we
Wow.
can do here. But in any case, if you default on the loan, they've got a right to say, okay, he pledged the business's assets, he or she. So what they can do is reroute your credit and debit card sales to pay for the loan. And so every time, at the let's say you batch or every time you close, those credit and debit card sales don't come to the business.
You go
They're
right to them.
rerouted. Yeah, they're rerouted to the company, and what the company does is use it to pay off the loan. And I have yet to talk to any business owner who has a UCC or who's taken out a merchant cash advance, and I have yet to hear someone say no, they didn't file a UCC claim.
Yeah,
And yeah, and once they do, I always let them know, okay, well, you're pretty much stuck, but not entirely, because there are options on how to, to get out of it while at the same time satisfying the loan, of
yeah,
course, and reducing the interest rate. And here again, some of those interest rates, they go as high as 200%. But there are other options out there as far as the MCA loans. And I always let people know we do offer business lines of credit. You're not charged anything unless you actually use it, but we're not going to go to the Secretary of State and file a lien against the business. No, that's that we
yeah,
don't. Here again, that's something we don't do. There are, of course, business term loans, and we've also can go into invoice factoring where you know, you're pledging your invoices collateral for a loan. Now, the best thing about invoice factor, and I don't want to, get too far off into it, is that we go ahead and we actually purchase the invoices from you from about 90 to 95%. And then we go back to the individual who owes the money on the invoice and we collect on it. But the good news is they've got their money free and clear.
yeah.
Another huge advantage is the interest rate is not even a third of what it is for an MCA.
Oh God, no. Yeah,
Yeah, of course, and another advantage of invoice factoring, even if the business goes out of business per se, it we do what's called non-recourse, meaning, yeah, you did pledge your invoice, they went out of business, we stop payment, but you keep the money
yeah.
because we're at that essentially at that point taking all the risk. Uh,
That's
And yeah, here again, we've also got business credit cards we've used, equipment financing. So there are a whole host of other options besides an MCA loan.
not
So
people know.
yeah, I know I would highly, discourage that. And here again, like I said, we're not in that space. We don't try to go in and place a lien on a business assets just to so we can get, one to in some cases $100 a day, others $500 a week.
Yeah.
But and here again, I've seen them as high as 2,000 a week. So it's awful. But just
Yeah,
to let people know, there are other options out there.
yeah. I've seen it as well, and I haven't. I used to work for a company that sold the MCA loans, and like they didn't place a UCC. It was like they're like the only one, but
Mm-hmm.
they did both the merchant processing MC loans and then the one strictly based off the bank statements. I haven't done
Uh-huh.
an MCA processing one in years, but I mostly all I encounter those that get it based off the bank statements, that type of loan.
Yeah.
Those and there are some places that like because the funny and let me say this too. In the
Mm-hmm.
MCA world, there's different tiers of lenders. There's lenders like
Yeah.
Paper, those businesses that do high revenue and great credit. There's businesses that like mid tier, and then there's the people those then there's the MC lenders that'll take almost anybody and look at
Mm-hmm.
the money, and it's ridiculous, and they're high risk, specialized. And the thing is, some of them, and this is where you be careful, will make you sign, if I'm correct in the term, but it's like a confession of judgment, basically, where basically it's like if you default on stuff and go like and they got to sue you, whatever. Like you have no recourse against it. You're just done. You're admitting it. And I'm like, holy cow! And people sign them. They pay it back, fortunately, but people sign it. And I'm like, what are you doing? It's just insane. And this all comes from. I remember this years ago because of the whole the financial crisis of '08. Before that, the banks were giving small business loans. When it
Mm-hmm.
happened, they tightened up. Small business couldn't get anything, and if you do, it's like it's a journey, a process, and hoops, all these things. And that's where the MCA world kind of exploded and came to serve that. And then people don't know that the reason why the MCA people can charge so much is because they get their money lines of credit from a bank.
Exactly. And they're just marking it marking it up.
Yeah, that's how
Yeah.
they do it. They have
Yeah.
to. Like the banks don't make money. They're just like, I'll give you money. I can't lend it like that, but you can because you're not regulated by the federal government and stuff. So
Yeah.
you know that I was like, wow.
Yeah, like I said, MCAs, they're the equivalent of modern day payday loan, and you've seen what happened there.
Yeah,
Yeah, it's just an outright disaster. But here again, people should look at all their options before looking at an MCA loan. And what those companies actually do, here again, they're predators, basically. I don't mean to, sound awful, but looking at a desperate situation and taking advantage of it.
yeah.
It is basically, yeah,
The other thing too, I'll tell people that like some people think then when they apply for these loans website, they're dealing with the direct lender and they're not. Because I've had people ask me that question before. And like if you're
yeah,
dealing with a big broker, they'll take your file and shotgun it to who knows how many hundreds of places. Your credit gets
yeah,
pulled ridiculous amount of times, score drops dramatically, and then you get with a then you get an offer or two, and then it's like whatever. It's one of those things to look out for. People just don't know. They don't ask the right questions. Nothing wrong with working with brokers. We broker it out, but we don't work with like
yeah.
20 people and go, let me shotgun it. I'm like, no, we ask questions. Where are you at?
Uh-huh.
What's the best one? Okay, you got too many? Sean, I got someone for you. They need help. Get them done.
Yeah,
What we do. I mean, 'cause that's the best way to do it versus trying to work with 20 lenders. So,
exactly.
and it's just one of those things where what was I gonna say about? I forgot I had a thought on this.
Yeah.
Oh yeah. Also, when you apply for things online, and if you apply to a broker, or actually, it may not be a broker, it may just be an information. And some of these sites, like I think Lenusa does this.
Mm-hmm.
No, you apply on their site, they'll say, "Oh, you need funding, we'll get you funding, right?" But what they do is they're a data broker, so they collect all this information on people like you applying for these loans and sell it to these brokers and direct lenders who then call you, and that's why you get all these phone calls from everybody, emails, texts, like everything. You're bombarded with it. And I'm like, holy cow. That's another thing people don't know. Like
Yeah.
that site you went on, they're making money by selling your information to somebody else who wants to loan you money. And they're selling to everybody underneath the sun because why not? If you got the data, you got the gold mine. It's the same thing as the way the credit bureaus work. People don't know. Side note,
Yeah.
the credit bureaus, it's your information, but they're selling it to other people, and you're not the customer, someone else's. So when was the last time Experian, TransUnion, or Equifax sent you a check in the mail? Say, hey, LaShawn Smith, here's the check for 250 for selling your data to other people. Ah, they don't do that. That's what happens, anyways. Back
Yeah.
to the program.
All right. Yeah, but I get it. It's a shotgun approach,
Yeah.
and people really have to understand it's not just a matter of going into a website putting your information out there. No, that's very risky, and I would actually discourage it. But yeah, and you're exactly right. It's just a shotgun. Next thing you know, you've got 50 phone calls, 50 emails. It's a headache.
But then it keeps going for like months.
Yeah.
It doesn't stop. They can
Yep.
text you all these things and say, "Oh, we can get you a proof of line of credit for 250,000." I'm like, "Yeah, okay, that's bullshit." They'll say whatever, and people fall for it too. Like, um, they send these things in the mail. You're approved for this much, and then they get it, and turns out it's not the loan that they were
Hmm.
looking for. It's something else. It's more expensive, and they can get it, and they're just trying to get as many leads as they can to get more funding out. And it's just like it's basically it's almost like a clusterfuck. And I'm like,
Yeah.
that's
No,
basically
you're
what it
telling the
is. And
truth.
I'm like,
Yeah.
no, but the industry, it doesn't die. It just keeps
Hmm.
going. And I'm like, all right, people are gonna do what they do. It's fine.
Yeah.
But hey, it's what it is. I want to ask you. So I know. So let's talk a little about the MCA. Was it MCA recontracting?
Actually, are you talking about the UCCs and how they're related to the MCAs, or are you talking about how the contracts are structured in and of themselves?
No, with what you're doing with the MCA recontracting, because like that's
Oh, I
different.
see, the debt restructuring.
Yeah, yeah,
Well, there again, there are two options, and I will talk about one of the most recent successful restructuring options that we actually offered a gentleman. Of course, we'll leave the names, but it's just an example.
right.
We actually have two options. We've got debt restructuring and debt refinancing. Debt restructuring, we're not looking at a minimum FICO score. What will happen, and I don't want to say too much about it because, MCA companies will look at this and say, oh no. But in
I
any
know.
case,
Yeah,
what we'll
exactly.
do is look at your MCA debt, look at the contract. In the case of this one gentleman talking about, we were able to reduce his interest rate by 50%, get him on a once a month payment plan as opposed to a daily payment plan. Because in his particular case, he was paying $100 a day to one MCA lender and then $500 a week to another one. So basically, he had two loans, two MCA loans out, and he was looking at about $1,000 a week going out the door. And out of that thousand, let's just say 4,000 a month is what he was paying. I would say, without looking at the numbers here and going back in the contract, out of that 4,000, probably about 2,500 to 3,000 was actual interest, and 1,000 was going towards the principal. So that's what people have to also look at as well. But anyway, we were able to restructure the debt, get him on a decent payment plan, and within a year, the plan we got him on, we reduced his interest rate by 50%, got him on a monthly payment schedule, and he ended up, like I said, saving a tremendous amount of interest, has a clear window on when he's going to pay off his debt, and within, let's just say 7 to 9 months here, he's debt free. He's done with the MCA. No more weekly payments. It was just one payment, and he walks away.
Yep.
So that's one of the good success stories from one of the your referrals there. So I was happy about that. But then again, we also have debt refinancing. Now, debt refinancing, that's more for customers who were, let's just say, whose credit score is about a 720 across all three bureaus. What we actually do is take all of their MCA debt, and we can take other debt, roll it into a business term loan, and reduce the interest rate depending on, other factors, get it at about 9 to 13% APR. Here again, it depends on the credit worthiness of the business here. Um, and they'll just pay back a business term loan over 12, 24, 36 months, as opposed to an actual MCA where you're looking at up to 200% APR.
Mm,
So it just depends on which route the business owner wants to take. Do they just want to restructure it, forgo the rolling their MCAs into a business term loan, or do they want a business term, roll their MCAs and other debt into a business term loan? So it just depends. Because, like I said, here again, restructuring, they'll accomplish the same thing,
hmm.
but the restructuring, credit's not an issue because we know when people come to us, yes, I need some assistance. Okay, we've got a good option for you. Let's go ahead and free up some capital for your business so you can grow at the same time, pay back this debt at very draconian terms. So it just depends on, what route they want to take.
Yeah, I like
Yeah.
to say the word draconian.
Yeah, because that's basically what it is.
It's
Yeah.
like some
Yeah.
of these loans, I'm like, wow, but people take it. People do pay back successfully. It is what it is. It's
Mm-hmm.
just that for me, I had to like ideally work with someone that's like, hey, here's where you're at. If you need to get one, fine, but pay out. Let's pay up what you have. Get your credit work on, business credit going, boom, and then like, oh, now you're ready for a term loan, a business term loan,
Mm-hmm.
which you much more beneficial. He's in cash flow, payment, all that stuff, versus just being stuck with MCA loans. And I've had customers in the past where the credit was great, doing well, But it took out an MCA because it needs to be quick, and that's
Yeah.
good for it. I mean, sometimes with the bank stuff, like they're gonna take their time. It's just what it is. But it serves its purpose. But unfortunately, it's become it sometimes it can become predatory, and I'm like, wow. But hey, it creates other opportunities to help out people to get them out of that and just to help out their business overall.
Exactly. And speaking of time, we can I'll list two examples here. The young lady who had the startup, we
Mhm.
had her funded within 3 days.
Oh wow,
It's
that's
just a
fast.
matter, yeah, on how fast she can get us the financial documents that we actually need. And in some cases, it just depends. We can do if the business owner has unpaid invoices, we can get those funded within 24, I think the 36, 48 hours. So there again, there are options available.
Let me ask you this: what?
Yeah.
Well, I kind of know the answer, but I'm curious to you. Why do you think people l- don't know about these options? Like, why do you think they don't take the time to look for this stuff? Because it's out there. I mean, there's so
Oh,
much information on everything nowadays, but like then again, it's like so much, and people are like, "I'm frozen from all the data. I'm just gonna just not do anything."
yeah, it's because from what I see, they're looking for something quick and easy.
Mm,
Basically. And if you try to start calling 15 different lenders directly, this is where we have a huge advantage. Then they're going to want you to come in or they're going to email you some forms. You've got to sit down for an hour or two, fill out all the forms. You really don't know the lender on a more personal basis.
right,
And by the time you finish, you don't went through five, six different lenders. Your credit score could have probably been a 720. Five, six different lenders later, you're in that 640, 650 range. But like I said, it's more or less because those MCAs are convenient, they're fast, and they're quick. I always tell people, look at your other options first. Like I said, invoice, if they have those can be funded within 24, 36, 48 hours. We had that one startup funded, depending on how fast she got, she got or the business owner got the information to her. She was done in 3 days.
yeah,
There was no, five, six, seven, eight different lenders to talk to. One pull on her credit report, and that was it. See? That's the huge advantage of going through a broker service. We know them, we know our lenders on a one-on-one basis, and we go in there and we talk to them for you
right,
before anything is pulled, and we already have a pre-approval before you even sit down and talk to them. That's like I said, but if they've got 2, 3, 4 days, then we're ideal. If you want to sit down an hour for each and go through 7, 8 different lenders, it just depends. But here again, that's a huge advantage that we have. Like I said, in our success rate speaks for itself. Here again, we got your gentleman restructured, the one you sent us, and then we got that young lady funded for her service-based business. So proud of that.
yeah.
Yeah.
It's good. It's good you can help startups because I don't typically deal with those or in
Mm-hmm.
startups because I feel like those can be tougher because either they're just starting, there's no revenue, and their credit's not that great, or like they just started and they're like 3, 4 months in,
Mm-hmm.
and then it's like, all right, that's great. How much you doing? Okay, you're not doing a whole lot. You're doing a lot. Then I'm like, what's your credit score? And it's never really. I feel like for startups, they have to have, and tell me if I'm wrong in this. For startup, they have to have a really good plan in place if there's no revenue and the credit has to be great, or if they are bringing in enough revenue, the credit still has to be great. Maybe a 680, I don't know, but I feel like they got to have like it has to be one of those two scenarios. Can't just be like, hey, I'm a startup, I got money, blah blah, great, I have a 580 credit score. And it's like
Ooh, yeah, a
I'm just
580.
saying,
It
like,
doesn't yeah, it
yeah,
doesn't necessarily eliminate you from all funding sources. There again, if they've got, let's just say, some net 30 invoices,
yeah,
then that's collateral and they can still get funded based on their invoices. But I would highly recommend not, going the MCA route because they'll get trapped into a cycle there.
Oh yeah.
And I know some of the MCA companies, what they'll do is when business owners do get in financial straits, they'll call the MCA company. They'll say, okay, well, we'll put a 30-day hold on your payments for this month. Well, they're not doing you any favors because they're still charging you interest even though you're not paying for it, but they're tacking it on to the end of the loan and thereby increasing the principal. And guess what? When the principal increases, interest increases starting that next month from that so-called low, your payments could increase. You see? So I always like to let people know pursue all your options first. And the MCA loans just no.
Feel like today's message is pursue all your options. Brought to you by
Yeah.
Apollo Financial.
Yeah.
Also brought to you by the letter F for
Yeah.
finance.
Yeah.
Sesame Street. Hey, there's a by letter A. Ooh, as a kid, this is
Yeah.
great. I know. Letter A,
Well,
wow.
yeah, it's more than just finance because we also look at it as an investment too, because we're investing in the person as well as the individual. And I say, yeah, your success is ours because we helped you all.
Yeah.
Yeah.
Do you think it's been tough to get people financing because especially with the economy, or do you think that's helped you guys?
Well, I wouldn't say it has anything to do with the economy. There again, Um, every business is unique, just like every individual is. And so
Yeah.
we just like to sit down, talk to the business owner, find out what their needs are, and kind of tailor, let's say, a loan that will suit their individual circumstances and have a window where it's actually paid back and something that they can actually live with every month. Whereas, we're not looking at four, five, $6,000 per month, and then only about 10% of that's going towards the principal balance. No, that's not how we operate.
Gotcha.
Yeah,
Cool, man. Well,
yeah,
sir, one last question for you.
yeah. Okay.
Any any final thoughts and things you would like people any final thoughts and anything else you want to impart onto those who listen to this, as far as the
Yes,
world of finance?
yes, there is. Yeah, avoid the debt traps. Like I always tell people, look at all your financing options. There are lower cost alternatives as opposed to a quick, easy MCA loan, you know. And if there are any questions, we are here to assist. If somebody just want to see what their options are. And let's see here. We've also if our Facebook page, can you do
Screen share?
a screen, yeah, a screen share there.
Okay, you can share it now.
Oh, okay. Let's see what we got here. Where is the? Ah, there it is. All right, let me know when you can see it here.
There we go.
All right, wonderful. And as you can see, we've helped out a lot of business owners here.
Yeah.
But they're more than welcome to come on here, see what we offer. We can be contacted at online marketing at apollofinancial.ltd. And if someone would like to, can also read some of our profiles if you want to see if you pre-qualify. We do have a pre-qualification right there on our Facebook page. They can go in there and type in the information. Takes about 2, 3 minutes.
Cool.
Yeah. So,
Awesome.
yep.
Well, Sean, thank you for being on today and passing your knowledge and let people know about how to best navigate the world of business funding,
Mm-hmm.
business funding, financing, and anything else. And definitely, people, if you have questions, reach out to LaShawn. He will definitely help you out. Especially if you guys know someone needs help, he will definitely keep in touch with them and take care of them. Let you know upfront, hey, we can help. Here's what we can do. and all that stuff. For that, I appreciate you, my friend.
Oh, you're welcome. You're welcome. Like I said, if they, sit and want to talk about their financing options, we're here more than we're here to listen and we're here to help.
Cool. With
All right.
that being said, thanks for being on, man. Everybody,
Now,
that's it.
all right. You have a nice afternoon there.
Thank you.
All right. Bye.